Greetings, ma'am. My name is Jagdishwaran Subramaniam and my metric number is 288787. Now let's move on to the ratios. The current ratio measure is a company's ability to cover its current liabilities with its current assets, reflecting its operational efficiency. MISC Berhad's current ratio increased from 1.03 in 2021 to 1.75 in 2023, indicating a significant improvement in liquidity and reducing the risk of financial distress. This trend suggests the company has become better at managing its liabilities with its assets. The next one is the asset turnover ratio, which assesses how effectively a company used its assets to generate sales. Remained stable at 0.22 from 2022 to 2023, recovering slightly from 0.19 in 2021. The stability shows that the company has maintained consistent efficiency in utilizing its assets to produce sales. The debt to equity ratio, which compares a company's total liabilities to its shareholders' equity. The ratio decreased from 0.80 in 2021 to 0.64 in 2023. This decline indicates reduced reliance of debt financing, leading a stronger financial position with lower financial risk. This improvement suggests that the company has focused on reducing debt levels or increasing its equity base, thereby enhancing its financial stability. The debt to asset ratio, which shows the proportion of a company's asset financed by debt, was above 0.49 in 2021, indicating moderate leverage. By the end of 2023 and into 2024, the ratio decreased to 0.39, suggesting a reduction in debt financing. This positive trend implies that the company is less leveraged and has a stronger financial structure, better positioned to manage its obligations and risks. Overall, this financial indicator depict a picture of improved financial health and stability for MISC Berhad. The return on assets measures how effectively a company uses its assets to generate profit. The company's ROE remained consistent at around 3% from 2021 to 2023, indicating stable profitability and effective asset management. This consistency suggests that the company has maintained its ability to generate steady returns from its assets despite changes in total asset values. The net profit margin, which shows the percentage of revenue that remain as profit after all expenses, slightly decreased from 16.24% in 2021 to 13.73% in 2023. While this decline indicates a small drop in profitability, the margin remains strong. This slight decrease could be due to rising cost of expenses that outpaced revenue growth. Nonetheless, maintaining a double-digit net profit margin indicates that the company is still profitable and efficient in converting revenue into actual profit. The last one is return on equity. Assesses the return on assesses the return generated on shareholders' equity. MISC Berhad shows the slight improvement from 4.96 in 2021 to 4.91 in 2023. This steady increase suggests that the company has been effective in generating profit from the equity invested by its shareholders. A rising ROE indicates that the company is creating more value for its shareholders, reflecting positive management performance and efficient use of equity capital. So now let's look at the first analysis of technical analysis, which is the moving average convergence divergence, also known as MACD. So the key observations are MACD line intersects above the signal line on May 29, 2024, indicating a positive signal and a good time to buy. Signal line intersects above the MACD line later, suggesting a possible buy or a bullish trend. The specific periods, under the specific periods, we can see that on May 3rd to May 10, 2024, the MACD line above the signal was above the signal line, which indicates that that's a good time to buy and a rising trend. On June 14 to June 21, the signal line above the MACD line, which indicates a potential sell signal. The data shows the RSI, the Relative Strength Index for MISC Berhad from November 2023 to June 2024. The RSI is a technical analysis tool used by traders to gauge the strength and magnitude of recent price movements. RSI is measured on scale from 0 to 100. If it's above 70, it indicates that an overbought condition, suggesting a price correction or reversal may occur. If it's below 30, it indicates an oversold condition, suggesting the price may recover. The key observations are the RSI has fluctuated between 30 and 70 over the past years. December 17, 2023, the RSI reached its lowest value of 25.6, indicating an oversold condition and a potential for recovery. On May 23rd, 2024, the RSI peaked at 88.5, indicating an overbought condition and a potential for a price correction. Now let's take a look at the moving average analysis. we can see that there are three lines: red, blue, and green. The red line is for 5 period, and blue is for 10 period, and green is for 30 period. The upward trend is strong as shown by the rising average ending prices, and all these three moving averages are above MISC's Berhad's current price, indicating an upward trend. The moving averages are close to one another, indicating limited movement in either direction. The price has been oscillating in a narrow range over the last 3 days, suggesting that market is uncertainty. The key observations are: over the 20 trading days from November 2023 to June 2024, the moving average show an increased trend, indicating the stock might be pricey. As investors sell their shares, stock prices could begin to increase. On 5th June, the stock was purchased at 8 ringgit 57 cents, while the price was 8 ringgit 74 cents. This signals a good time to buy the stock when the current price is higher than the MA's price. The stock was sold when the price is its price increased and the MA's price fell.
Good day, my name is Gangasri, metric number 2888848. Today I would like to present regarding Gamuda Berhad. First of all, I would like to give a brief introduction about Gamuda Berhad. As we all know that Gamuda Berhad is a leading construction and a real estate company, but that's not the only thing they have done. They have diversified their business into a lot of branches. For example, they are infrastructure development company, property development company, and also they provide engineering services as well. So we can see that this company is well known and very competitive because they have a very good financial record, they have a very good government backing, and also everything they have done is very good because it has proven by their financial credential that this company is doing very good as well. Now I'm going to explain about the fundamental analysis. As we know that I'm going to start with some of the ratio that I've chose to explain. First of all would be their current ratio. As we know that current ratio is about how much their company current asset could cover their short-term debts. As we can see in the graph that I've provided here, that on the year 2022, it seems a bit lower, but it's not at a distressed position, but they still did well, but it's slightly lower compared to 2021 and 2023. This might be because 2022 we know that there were a lot of war happening, mainly the Ukraine and Russian war. This might be a contributor factor to why their ratio was slightly lower during 2022. And the second one would be the inventory turnover ratio. We can see during the year 2021, it was higher compared to 2022 and 2023. For the debt to equity ratio, we can see that the 2023 they have keep increasing. The trend has been keep increasing because we can see from 2021 and 2022 it has been slightly lower than 2023. For the equity return on equity, we can see that the highest return on equity, there is huge differences, and it was on the year 2022. We can see that their share price were doing good, and also the company was doing good. That's why this has contributed to the return on equity on 2022. There is huge differences. There's a lot of higher differences between these 2 years. And also for the net margin profit, we can see that it has been uncertain, but for year 2023 it has been quite higher compared to year 2022. So we can see that meaning the company is doing a lot of revenue compared to the cost of production. So it means that the company has been but even though it seems that 2022 it's lower, but it's not bad, it's the ratio it's not at a financially distressed position. So this company is doing good based on the fundamental analysis that I've done. Now I would like to explain about the technical analysis part. For the intrinsic value, we know that the current share price is at 6 ringgit 38 cent, but after doing the intrinsic value calculation using the PE ratio, we know that the real share price should be around 7 ringgit 25 cent. So this share price is undervalued. So this would be a correct time for the shareholders to purchase this company share because it is undervalued. For the MACD, caution is advised if the signal crosses above the MACD line, indicating a potential weakening upward trends. For the moving average, we know that the chart is positively upward trend. So this means that there is a potential buying opportunities based on the historical trends. Last one would be the support and resistance. As we know that the stock price is approaching the resistance level. This means there is a potential for either breakout or reverse depending on the market dynamics. So this is all from me. Thank you very much.
Hi, my name is Swari Anaprabhat Eju and my metric number is 285657. Now, I will talk about the industry analysis of Public Bank Berhad, or known as PBB. But first of all, Public Bank Berhad was listed on Bursa Malaysia that have established by Tan Sri Datuk Sri Dr. Teh Hong Piao in 1966. Public Bank Berhad, also known as a bank for the people, because it has broadened its service to include investment banking, share brokering, unit trust funds, general insurance, personal, business, and Islamic banking. Okay, now we move to the industry analysis. For the industry analysis, there are consists of 4 stages. The first one is foundations and early growth. For this stage, as I mentioned before, Public Bank Berhad was established in 1966 to address the needs of small and medium-sized business, or known as SME and individual customer. The next stage is expansions and diversifications. In this context, Public Bank Berhad has expanded its branch network throughout Malaysia, ensuring that its bank has a network of branches. The bank has expanded the range of products it's offered in this context to include corporate banking service, hire purchase agreement, and home loan. With the advance of automated teller machines (ATM) or other computerized banking service, Public Bank Berhad has embraced technological innovations. The next stage is regional expansions and strengthening. In terms of this stage, PBB has regionally expanded its operations to nations like China and Hong Kong. To ensure excellent financial performance in this setting, the bank has continually recorded strong financial results with notable increase in assets, profits, and market capitalizations. Furthermore, Public Bank Berhad has received praise for its excellent customer service, prudent management techniques, and robust financial performance. For the last stage is digital transformations and innovations. For this stage, Public Bank has made digital transformations a top priority in recent years, strengthening its online banking offerings and holding a commanding market shares in spite of obstacles like the COVID-19 pandemic. Not only that, Public Bank Berhad also has prioritized sustainability and corporate social responsibility (CSR) program to improve digital service in response to the COVID-19 pandemic issues and offered assistance to customer and business through a range of relief initiatives. For the next aspect is in terms of competitive positions. For market leaderships, Public Bank Berhad is consistently ranked among the best banks in terms of deposits, loans, and assets. It has a specific stronghold in the retail banking industry. For the next is financial performance. Public Bank Berhad, which continuously achieve excellent return on equity (ROE) and return on assets (ROA). Even in times of economic recessions, the bank's financial indicators have grown steadily and consistently. Lastly, product and service diversifications. A wide range of financial services and products are available from Public Bank, including corporates, Islamics, small and medium enterprise (SME), and personal banking. Now I will explain about the fundamental analysis of Public Bank Berhad. Firstly, on liquidity ratio, which is current ratio. For the current ratio, PBB has an inconsistent value between 2021 until 2023 because it has an increase and a decrease throughout that year. For example, in 2021 to 2022, it has an increase from 5.73% to 7.88%, but it has decreased in 2023, which is decreased to 5.7%. Next, on the operational efficiency ratio, which is for the assets turnover ratio. For the assets turnover ratio, PBB has recorded an increasing trend between 2021 to 2023. For example, in 2021, the asset turnover ratio recorded at 4.24%, in 2022, 4.34%, and in 2023 recorded as 4.98%. It can be said that there are an increasing trend throughout that year. After that, leverage ratio. For the debt to equity ratio, Public Bank Berhad has an inconsistent value between 2021 until 2023 because it has an increase and a decrease throughout that year. For example, in 2021 to 2022, it has increased from 8.36% to 8.57%, but it also has a decrease in 2023, which is decreased to 8.06%. For the last ratio is profitability ratio. For the net profit margins, PBB has recorded a decreased trend between 2021 to 2023. For example, in 2023, the net profit margin recorded at 29.20%, in 2022 to 8.79%, and in 2023 recorded as 26.19%. It can be said that there are a decreasing trend throughout that year. Next, we move to the intrinsic value. For the intrinsic value, we have used two methods, which are dividend discount model and price to earning ratios, or known as PE ratio. Using the discounted cash flow, or known as constant growth model, we have assumed that growth rates for the dividend will be at 4% every year, and the next year dividend will be 26 cents. The required rate of return is 7%. So the intrinsic value will be 8 ringgit and 67 cents, is significantly higher than the current market price, which is 4 ringgit and 5 cents. This suggests that Public Bank Berhad's stock is undervalued, so potentially presenting a good buying opportunity. But for the PE ratio, the intrinsic value is 4 ringgit and 80 cents, is higher than the current market price, which is 4 ringgit and 5 cents, which assumes the estimate earning per share is 4 cents and estimate price to earning ratios at 12 ringgit. This suggests that Public Bank Berhad stock is undervalued, indicating a potential buying opportunity. Now move to the last part, which is technical analysis. For the first is moving average convergence divergence MACD. The data on Public Bank Berhad MACD pattern from December 2023 to June 2024 highlight significant trading signals for investors. The MACD line blue and the signal line red are analyzed for buy and sell signal. From May 29 to June 30, 2024, the MACD line consistently crossed above the signal line, indicating a bullish trend and suggesting a buying opportunity. However, a crossover of the signal line above the MACD line signal a potential bearish trend and sell signal. During May 6 to May 2024, the MACD line crossing above the signal line suggested a buying opportunity due to a growing trend and low stock price. Conversely, from May 28 to June 21, 2024, the signals line crossing above the MACD line indicates a potential sales signal, suggesting it might be time to sell due to a bearish trend. Next is Relative Strength Index, RSI. The RSI chart for Public Bank Berhad over the past year revealed significant fluctuations in stock sentiment and value. On March 12, 2024, the RSI reached its lowest point at 17.8, indicating an oversold conditions and a positive buying sentiment. Conversely, on May 23 in 2024, the RSI peaked at 71.9, suggesting an overbought conditions. This high RSI value indicates that the stock price was excessively high, prompting investors to sell and leading to a subsequent price decline. The RSI value illustrates the stock volatility and investor reactions to perceived overvaluations and undervaluations. After that, moving average. The analysis of Public Bank Berhad's simple moving average SMA for 20, 50, and 100 period shows an upward trend, indicating a durable positive pattern. All three SMA are above the current stock price, suggesting continued bullish sentiment. The observed gap between the price bar and the moving average due to the top of the bar being lower than the moving average indicates a likely market move to cover up this gap, especially in a bullish or sideways market. Over the 20 trading days from September 2023 to June 2024, the increasing trend of the moving average suggests the stock is becoming pricier, prompting investor to sell and causing the stock price to rise. On June 4, the stock was purchased as 4 ringgit and 12 cents, slightly above the moving average of 4 ringgit and 10 cents, signaling a buy opportunity. This allowed for selling at a higher price as the stock price increased and the moving average decreased. And the last part is support and resistance. The current price of Public Bank Berhad is 4 ringgit, reflecting a 1.5% increase from its previous close. The price is testing a crucial resistance level at 4 ringgit. A breakout above this level could indicate further gains and a shift to negative momentum, whereas failure to break it might lead to a decline towards the 3 ringgit and 95 cents support level. A move above 8 ringgit and 53 cents would suggest an accelerated upward trend. The 3 ringgit and 95 cents support level has been stable recently, making it an important level to watch. However, the relative low trading volume suggests investor uncertainty about the market directions. That's all from me. Thank you.
Hello everyone, I'm pleased to introduce you to Hap Singh Company, a prominent name in the biscuit industry. Founded in 1958 in Batu Pahat, Johor, Hap Singh has been committed in delivering high quality and affordable biscuit. Their core products have earned a leading market position in Malaysia and are present in over 40 countries worldwide. In 2022, their annual revenue reached 200 million, a testament to their commitment to quality, integrity, and innovation. Additionally, they take pride in community support and environmental sustainability initiatives. Let's take a brief look at growth cycle of Hap Singh Industry Berhad. A leading player in the food manufacturing industry, Hap Singh was founded in 1958 by four brothers in Batu Pahat, Malaysia. The company started with traditional Chinese biscuit and expanded to cream crackers, which became their flagship product. In the 1980 and 1990, Hap Singh diversified its product range to include biscuit, cookies, and snack, and introduced innovative packaging solutions. The company stretched its position in the domestic market and began exporting to neighboring countries. In the 2000s, Hap Singh invested in modern manufacturing technologies and implemented quality control measures. They launched target marketing campaign to reinforce their brand image and build customer loyalty. During the 2010, Hap Singh solidified its market leadership in Malaysia and expanded its export market to Asia, the Middle East, and other regions. The company embraced e-commerce platform to reach a global audience. Looking ahead, Hap Singh plans to adopt sustainable practice, focus on healthier products, and invest in R&D for product innovation and technology integration. Our current ratio improved from 2.09 in 2021 to 2.27 in 2023, demonstrating strong financial health. The asset turnover ratio remains stable at 1.5 from 2022 to 2023, showing consistent efficiency in generating revenue from our asset. Our debt to equity ratio decreased from 0.51 in 2022 to 0.47 in 2023. This indicates we have reduced our reliance on debt, leading to a stronger financial position with less financial risk. The net profit margin increased significantly from 8.2% in 2022 to 12.62% in 2023 after a slight dip in 2021. We observe a bullish signal as a MACD crossed above the signal line on 29 May 2024, indicating a favorable time to buy. However, counter the advice as the signal line later crossed above the MACD on 21 June 2024, suggesting a potential shift to a bearish trend. The RSI for Hang Seng fluctuated significantly, ranging from 29.9 to 95.3 on June 11. An RSI below 30 suggested oversold condition, while above 70 indicates overbought condition. All SMA 20, 50, 100 periods demonstrate upward trends, signaling overall bullish sentiment. The current price remains below this average, highlighting potential support around 1.1 ringgit Malaysia. Currently, trading at 1.5 ringgit Malaysia, reflecting a 3.5% increase. We observing resistance around 1.26 ringgit Malaysia. A breakthrough could indicate further upward movement, while the support level at 1.11 ringgit Malaysia has shown strong stability recently.
Hi, my name is Khoo Gar Hong and I'll present Allianz Malaysia Berhad or AMB. It is part of the globally renowned Allianz Group headquartered in Germany. Allianz boasts 147,000 employees and serves over 100 million customers in 20 countries. Allianz made its entry into Malaysia in 2001 by becoming the controlling shareholder of Allianz General Insurance Malaysia Berhad. In 2007, it restructured and rebranded AGIM as Allianz Malaysia Berhad. Allianz Malaysia Berhad is an investment holding company with two wholly owned subsidiaries, Allianz Life Insurance Malaysia Berhad and Allianz General. Allianz General provides motor insurance, personal lines, SME business coverage, and large industrial risk, making it a leading general insurer in Malaysia. Allianz Life offers comprehensive life and health insurance and investment-linked products, and it is rapidly growing as one of the top insurers in the country. Listed on Bursa Malaysia, AMB issued its first sustainability report in 2011, highlighting its commitment to transparency. By 2019, AMB expanded to 32 branches nationwide, aiming to be the most trusted financial service provider for Malaysians. Allianz Malaysia Berhad holds a strong competitive advantage due to its significant market size. It is one of Malaysia's leading insurance company with a market capitalization of 3.7 billion, second only to LPI Capital Berhad. These market positions give Allianz a strong brand name, a broad customer base, a high customer loyalty. Such strengths make it difficult for competitors to challenge its position and discourage new entrants from entering the market. The current ratio of AMB in 2021 is 6.43, and it decreased and remained the same in 2022 and 2023, which is 1.26. The asset turnover ratio of AMB in 2021 is 0.27, and it decreased continuously from 2022 to 2023, which it recorded at 0.21 and 0.20 respectively. The debt-to-equity ratio in 2021 is 0.02, and in 2022 is also recorded at 0.02, and it increased slightly in 2023, which is 0.03. The debt-to-asset ratio is 0.0 in 2021 and 2022, and it increased slightly to 0.01 in 2023. Overall, the health of the debt in AMB is very healthy because they use really less debt. The net profit margin in 2021 is 8.03, in 2022 is 12.53, and in 2023 it is 14.57. The return on equity in 2021 is 11.71, in 2022 is 13.91, and in 2023 is 15.6. The ROA for AMB in 2021 is 2.2, in 2022 is 2.67, and 2023 is 2.97. Overall, the profitability ratio increased from each year, and it shows that AMB has the strong potential in growing their profit in future. To calculate the intrinsic value for AMB, we use the P/E ratio to calculate its intrinsic value. We estimate the EPS for the next year is at 3.52, and the estimated P/E ratio for AMB for next year is 11.66. So by multiplying the EPS to the P/E ratio, we can get the intrinsic value of AMB at 41.04. It shows that the AMB is currently undervalued and it may signal a buy options for investor. For technical analysis, we use MACD, RSI, moving average, and support and resistance line. From through the MACD, we can see that the blue line is going to cross over the red line, and because the blue line will be above the red line, it shows a potential buying signal. And the RSI shows an upward trend, and it is also below 70 and above 30, which shows that maybe there will still be a increasing trend for the price. The moving average, we can see that the price is above the moving average line, like most of the line, and maybe that the trend is still will be continue in the uptrend, and through the support and resistance line we can see the price is moving sideways in the short run, and maybe there will be a breakout to the resistance line and continues its upward trend. Thank you.
Our trading activities over 20 days from 3 June until 22 June 2024 resulted in a series of transactions aimed at capitalizing on price fluctuation and market opportunity. We achieved a total gain of 130 for MIAC, 56 for Public Bank, 186 for Gamuda, 95.5 cent Ringgit Malaysia for Hap Seng, and the last one is 42 Ringgit Malaysia for Allianz. Leveraging both buying and selling strategy to maximize profitability. This update underscores the importance of strategic decision making and active portfolio management in navigating dynamic market conditions. Thank you.